The presumptive Democratic presidential nominee, Joe Biden, released his nearly $4 trillion Buy America tax plan this week, and he laid out his $700 billion Build Back economic plan as he looks to compete with President Trump for the working class vote come November. Joining us now to discuss is Stephen Moore. He is economic advisor to President Trump. And Steve, good to see you again. I guess no big surprise here that you're not loving Biden's plan. You wrote an op-ed in which you said his tax plan would erase 40 years of pro-growth progress. How so, Stephen?
Well, good morning, Alexis. Thanks for having me. You know, we have seen real progress in reducing tax rates in the United States to make the United States more competitive. And that started obviously in the Reagan era when we cut the highest income tax rate to 70% and have continued, you know, not uninterrupted, but to reduce tax rates to make American businesses more competitive in the global scene. We cut the income tax rates and the corporate rate very substantially under Trump. And that was what led to the big boom in the economy, in my opinion, or was one of the contributing factors. So this would be, in my opinion, the Biden plan would be extreme. This is an investor show. This would be very, very negative for investors. It increases the corporate tax rate from 21 to 28%. It increases the capital gains tax, which obviously is a direct tax on stock ownership, from 23.8 to almost 40%. And then people haven't realized it does something that's never been done before in American history. It gets rid of something called the step-up basis death on capital gains, so that, you know, if you die, you can turn over your stock to your children and your heirs. That would go away. Those are very, very substantial penalties on owning stock. I estimate about a 20% reduction in stock values if that plan took effect.
Stephen, you call this Biden plan an act of supreme economic masochism. Is it? And we had Austin Goolsbee on yesterday. I understand his perspective coming from the Obama administration. He says this is not an anti-business plan. Do you think it is?
Well, what's pro-business about it? I mean, Austin's a good friend. He and I talk all the time. Seriously, I mean, I've looked through the whole plan. I don't see a single thing that is in this plan that would actually help American businesses compete on the global scene. I mean, you're raising the corporate tax, you're raising the dividend tax, you're raising the capital gains tax, you're raising the estate tax, you're dismantling American oil and gas, which has been the biggest driver of the American economy, you know, over the last 10 years. I mean, somebody point out to something in this plan that is good for business. I can't find it.
Hi, Jared Blickery here. Just shifting gears a little bit, I wanted to ask you about the Federal Reserve here. President Trump has been very critical in the past, but kind of come around now that the Fed has unleashed all this monetary stimulus. What are the current thoughts on Chair Powell? And if President Trump survives the election here, is Chair Powell going to survive? Is he going to get another term?
Well, those are great questions. I've been a pretty severe critic myself of Chairman Powell. That's one of the reasons that I think, among others, that Donald Trump had nominated me to be on the Federal Reserve. I think that that Powell made very big mistakes in 2018, and we could have had a lot faster growth if they hadn't started raising interest rates at a time when there was no inflation. So I was very critical, as Donald Trump was at that time, of a big mistake that Chairman Powell made. And I think everyone now looks back and admits that that was a mistake. But I will give him credit. I think he's actually handled this crisis pretty well, actually. I don't like everything he's done. I don't like the idea of the Fed getting involved in direct lending programs with businesses. I think that's not the responsibility of the Fed. But in terms of his management of monetary policy, and, you know, I've been saying this for months, you know, we've had a greater threat of deflation than inflation. We saw some of the consumer price numbers come out today that showed a slight rise in consumer prices, which actually is a good thing because I was worried about deflation. So I will have to give Chairman Powell about a B+ in terms of how he's handled this, you know, hopefully once in a lifetime health and financial crisis.
Steve, let me just play devil's advocate for a moment. If you don't raise taxes, how do you deal with the ballooning deficit as the government and the Fed throw all of this stimulus at this pandemic? How do you bring that deficit down?
Well, you don't bring the deficit down by ruining the economy, right? I mean, there's no way you can raise revenues in a shrinking economy. And so this would do very severe damage to the U.S. economy. I think everyone would generally agree with that. I think the big winner, by the way, would be China. China would be dancing a little jig if we were so economically masochistic that we raised taxes dramatically on American businesses. What this would cause, Alexis, is what we saw during Trump, one of the big triumphs we had was we saw massive amounts of capital from the rest of the world flowing into the United States. We estimate we imported about $1 trillion investment capital that built businesses and jobs here. If you turn the dial in the right direction, you get jobs. If you turn the right dial in the other direction, you don't get jobs. And so I just don't see how you can possibly reduce the budget deficit. Alexis, I'm as concerned about that as you are. I think the deficit is outrageously high. I think this idea of another multi-trillion-dollar phase 4 plan is ridiculous. I think it will do more damage than good for the economy, but you can never balance the budget on an economy that is hobbled by higher taxes. In fact, we got more revenues in when we cut taxes under Trump than we did before.
Stephen, is the president seriously considering making China pay reparations for the COVID-19 pandemic? And if so, does he have a number in mind?
It's a good question, too. I have not talked to the president about that particular issue, but I think it is on the table. I would strongly favor reparations. I think the American people would very strongly favor reparation payments from China. Their behavior has been, I would describe it as sinister in the last 6 months. They've been unrepentant. Their deviant behavior led to the spread of a virus that did trillions of dollars of damage, not just to the U.S. economy, to the world economy. And I believe it is justified for the Chinese to pay for their mistakes and the damage they did to the American economy. Now, how much that would be is a good question, Nick. I would say, somewhere potentially in the hundreds of billions of dollars range. And then, of course, the question is, how do you get China to repay? Or to make those payments? Do you impose sanctions? Do you impose tariffs? There's even been some talk, although I think the White House has shunned this, is the idea of, well, if you owe us $500 billion and you own $2 trillion of our debt, maybe we'll call it, we'll erase $500 billion of the debt and we'll call it even. So look, China does have to be reprimanded financially for spreading this China virus.
Stephen, in the 30 seconds I have left with you, did we get another stimulus package? Is that the right thing for the government to do and to re-up that $600 weekly unemployment check for Americans?
No, that's a great question, Alexis. The single most important thing we have to do going forward is stop the $600 a week payments. We estimate we've probably already lost 1 to 2 million jobs because of those payments. And we estimate with my buddy Casey Mulligan, the top labor economist in the country, that if President Trump were to sign a bill that extended those benefits for another 6 months, we would have about 8 to 10 million fewer jobs by the end of the year. It's a very significant negative. We have 30 million unemployed people today, and yet the biggest problem employers are talking about right now is they can't get workers back on the job because 4 out of 5 workers are making more money for staying unemployed than getting back on the job. That is a very, very economically destructive plan.
And of course, all this happening as the virus spikes in a number of states across the country. Stephen Moore, economic advisor to President Trump. Thanks for being with us.
Thank you so much, guys. Anytime.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.